managers. Um, the title of this is to buy or to sell an option. So today I'm going to review one stock with two different trade ideas. I'm looking here at the implied volatility by rank. As you can see, Netflix. Everybody's heard of Netflix. People like trading Netflix. And it's pretty high up on the rank. So if you look at one of the reasons it's high up on the rank is earnings are coming out here after the bell on April the 18th. But that gives us some time to make a trade between now and then. And if you want to trade short duration, the zero DTEs, the big trade going around the world today, but Netflix doesn't offer options every day. So if you look at one for 5 days from now, this coming Friday, one of the things I like to do before I place the trade is to review what Netflix has been doing. And here is a 1-day chart going back 3 months. And as you can see right here, Netflix did a big gap up from $4.95 to $5.39. About a $40-some move in 1 day. And since then, it has continued to kind of creep its way up. Now, looking here at our indicator, our CCI indicator, it's basically above the overbought line, and it's kind of starting to hinge down somewhat. So this is telling us that Netflix is bound to do a little pullback. Okay. But again, we're going to come up with two different trade ideas. One is to sell a option based upon the fact that you believe it's going to go down. In that case, what I would do is to buy basically an at-the-money put. It closed 627, 628-ish. And so that's going to require $665 to buy that. Now, if you want to take that big of a risk, because you, in theory, could lose all of that, or you could then turn around and sell the 620 put, and then this trade would cost you $1.97, which would then be your max loss. And if it goes down below this, you could make as much as $303. Okay, clear that trade out. But let's say you believe that Netflix is going to continue to go higher, which it very well could. It's got a 50-50 shot of going higher or lower. You would then turn around and buy the 630 call, and that would cost you $770, and that would be your max loss. And there is no max win on this. If it were to do another big gap up to 50, I mean, you'd be a very happy person. But that's a lot of risk to take in 5 days. So what if you sold the 635 call? The trade would cost you $1.95, which would then be your max loss, and max profit of $305, which again, if it blew all the way up past the 635, which Netflix is very capable of doing. Well, for a bonus trade, what if, and I'm just looking at this for the first time, what if we did one of these numbers, reverse iron condor, I guess you could say. You could play it either way, but then would be the max loss of $448 with a max profit of $52. And that would base on it hanging at 630. So that's not a very good trade. Scratch that idea. But anyway, the two previous trades you might want to consider. If you'd like me to review some different stocks, I'm just kind of willy-nilly pick these out myself, let me know in some comments, and we'll see what we can do. No matter what you do next week, good luck to you.